Hey, welcome back to the weekly option. This is your host, Eric, and I'm making this video late. I'm doing it just before the open on Monday morning. So all the prices will change here for a minute, or as soon as the market opens. But I wanted to get a video out. The truth of it is, it's always hard to trade on the prices given on the show, but I create it that way so that you guys can go back and look at your notes all weekend long and kind of prepare the trades that you intend to enter on Monday morning. So we're going to start off. So I want to do this video knowing fully well that the moment the market opens, these prices change, right? But I can at least add some clarity so that you can follow along with me on the show a little bit more. So first off, we looked at a covered call on this company called Denison Mines Corporation. You can see it trades sub. I mean, this is absolutely a penny stock. In fact, prior to we'll call it February of this year, this was absolutely trading for pennies. I mean, going all the way back, but it's had what looks like a decent little run lately. So I looked at buying stock and selling a covered call. So let's go over to the call screen. These options are all for the June 18th expiration. So that's a week from Friday, roughly 10 trading days from now. So I'd be selling this 1.5 call and collecting 15 cents because you sell at the bid, right? So I would collect 15 cents for selling that call and owning stock. That's the covered call we looked at. Next up, we had a company called Workhorse Group, and you can see how it's been doing. It had a nice little pop last week. You can see earnings on May 10th, and it's just sort of like had a slight uptrend, but then a gap move up. Came off on Friday. We'll see how it does today. So far, it looks like it's going to be. Pre-open, it's 13.75. When we look at the options on this, what I wanted to do here, and you have to make sure that you're at the June 18th expiration. So June 18th expiration, I'm looking at selling this 12.11 put spread. You would sell the 12 put at 97 cents and buy the 11.5 put for 77 cents. So the difference is 20 cents. So you would collect 20 cents for selling that spread. And I like that it's further away from the money too. With the gap move up, this stock could definitely move higher, lower, anything goes. But as long as I can make my numbers work, then I'm happy. Like, look at this 13.12 half. I mean, you'd sell that thing for 28 cents. So you might say, well, wouldn't you rather collect 28 cents and only have 22 cents at risk? Yes, but what happens if we do move lower? We still have 2 weeks to wait on this. So I'm trying to build in a little cushion and still get the numbers, the kind of numbers that I want. And I'm willing to sell these 50-cent wide spreads at 15 cents or more. But if it's too much more, you have to consider that the markets might be telling you something. So the 12 put, you can see 126 and 101. You could sell that one for a quarter. But I went one step lower and did the 12.11 for 20 cents. All right. Final trade for the show this week was rocket companies. And by the way, I'm using TradingView for my charting. I love this charting platform. Very effective. So you can see rocket companies had went to the moon like a rocket and then came on back. And right now we've been in a slight uptrend since earnings, kind of like the last company we looked at, and pre-market it's looking about where it closed on Friday, 1977, and I'm looking at actually let's go over here to their options chain. I'm looking at buying a call spread. Looked at the 19 half call spread, paying 31 cents. This thing expires in 2 weeks, right? Expires a week from Friday. You'd pay 162 for the 19 call and sell the 19 half at 131. That's only a 31 cent spread, which means that you could make 19 cents on this on this spread if it finishes in the money, which right now it is. And if you were to go, I don't like these like partials, these 18.89, 19. That's an 11-cent wide spread. So you might do the math here and say, oh, 16 cents. No, you're paying 16 cents for a spread that can only be 11 cents. In fact, if anyone wants to do that, just email me and I'll do it personally. But if you look at the 18, hopefully you understand why I'm saying that. If you look at the 18.5, 19, you'd be paying 190 and 151. That's 39 cents. So you'd only maximum make 11 cents there. But here, if you go a little closer to the money, even though you're paying 31 cents, you could still make 19 cents on this trade. And that is 61% return. So take that all day long, right? So hopefully this helps. Thank you guys again so much for listening to the show each week. You are amazing, and happy trading.